Well, innovation is one of those corporate words that I think is used so often, it can end up meaning almost nothing. I mean, in insurance, it's tempting to reduce it to things like apps and algorithms and fewer forms to complete. But I think genuine innovation has got to achieve something more substantial. I think it's got to make things easier to understand for people who are wanting to buy insurance. It's got to make it more affordable and I think available to people whose finances don't fit neatly into traditional policy applications. There's a big opportunity in Africa. It also raises some interesting questions, whether or not more data produces better insurance, what happens in terms of exclusion potentially, and will AI strengthen financial advice or will it replace parts of it? And to unpack that, I'm joined by Clyde Parsons, Head of Innovation at Liberty, who's an actuary and insurance executive with extensive experience in life insurance, in these things, and product development and income protection. So Clyde, great to have you with us on Business Talk today. Let's just begin by kind of rescuing the word, I think, a little bit from the corporate jargon bin. When you look at it, through an insurance lens, what differentiates innovation in insurance from the broad kind of technological innovation that we often talk about?
Morning, Michael. Thank you. Yeah, and I think it's a great point to start on the discussion. And very often with our teams, we start the discussion around asking, who works in innovation or who works in product development? And it speaks very much to your point. I think the natural tendency is for people to gravitate towards saying innovation is fintech and digital and technology exclusively. But my take is slightly nuanced on that. I think, innovation is really how do we solve problems and how do we solve insurance's biggest problems, which are accessibility, understandability, and access. So how do we get more insurance to more people in an affordable way and make sure that they understand what they have? So really, when we look at what is the product, you might be forgiven for thinking it's the terms and conditions of your insurance contract, but I really think every single engagement and touch point with our client is a product, and all of those are ripe for disruption and improvement. And that's really innovation. How do we improve the way we access clients? We make insurance available to more of our population. How do we make it more personalized, hyper-personalized, more appropriate to their needs, and importantly, more affordable, because there is this massive gap in what people need relative to what they can afford.
That's such an interesting and, as you say, nuanced difference, because to me that separates genuine innovation from just digitizing a process, for example, because you're testing here whether the technology actually has those outcomes. Does it actually mean that I'm going to be better protected or pay a fairer price or maybe understand what I bought a little bit better at the end of the day? And in Africa, I think there's this huge opportunity to innovate because we are kind of non-traditional market. People don't have the traditional 9-to-5 jobs. We've got so much informal sector economy. How does innovation, as you see it, in insurance support economic growth in our context?
So I think the first question there, Michael, is how insurance supports economic growth. And if innovation can improve that insurance solution, it only exacerbates the way that it helps that economic growth. So if we start with insurance, insurance allows individuals, families, and businesses to have peace of mind and protection. And what that means is you may take decisions, take options that wouldn't have otherwise existed if you didn't have the safety net and the safety blanket of insurance. So it provides that financial safety blanket that gives people comfort to take bigger risks, take chances, try entrepreneurial initiatives, for example, as a business or as an individual. And that only helps to drive economic growth. The second thing that it does is it protects the economic position that people have fought for and built up over time. We are all naturally in a state of quite a lot of economic fragility and financial fragility, and any bump in the road can put us back quite a few steps. And what insurance does is in those most disastrous and difficult times for us as individuals, it's there as a financial support. And we can't give our clients a hug, we can't make them a lasagna, we can't make them feel better, but financially we can step in and give them that resilience and support to push through those difficult moments. And that's often what economic growth requires, is pushing through tough times. And to the extent that insurance can help with that, it really builds resilience at the individual level, the business level, and for that matter, at a national level. And to the extent that innovation improves the insurance product, the insurance outcome, hopefully it does more for our financial resilience and our economic growth as a nation.
Yeah, it's such an important point. Recently, we're at a psycho breakfast in East London, and one of the big themes, talking to the accounting profession, but it was bigger than that. They had a lot of their clients in the room, and they weren't the big businesses. These were the small, medium-sized enterprises. These are the entrepreneurs that out there, government reckons, are going to create 90% of the new jobs that we need and create that economic growth. And if you're enabling those entrepreneurs through giving them an insurance policy that gives them the confidence to take sensible risk, to go out and have a swing for the fences, I think it really is a hugely positive intervention. And as you say, if you can use innovation to do that better, absolutely makes perfect sense. Why then do we have this big gap? Because South Africa's protection gap is, I think, it's not just an insurance industry problem, as we said. It means households are often a death or a disability or prolonged loss of income away from serious financial distress. A company is maybe, if they don't have business interruption cover, one broken down vehicle away from a big cash flow problem. Why do we still have this big insurance gap?
It's a great question, Michael. And to echo your point, I'm passionate about insurance. I literally love insurance because of the good that it can do. I see it as a social good and a community coming together to protect our most vulnerable in their hardest times. And to the extent, to your point, where that's a small entrepreneurial business, the better we can protect them, the better for society. So I'm hugely passionate about it, and I'm hugely passionate about closing that insurance gap. In my mind, it exists for a couple of reasons. The first one is perception. So there's an old saying, nobody goes out and buys insurance. Insurance is something that's sold. And I think the perception is always, I don't need it, I can go without it, I'm a young person, nothing will happen to me, I'll take my chances this year, we haven't had a fire at the business for a while, let's see what happens. So I think the perception and the perceived value of insurance is the first problem. If you speak to someone who's just received a claim, their car was broken into, they've had a fire, they've had a disastrous personal event at home, and they've received a life insurance payout, a short-term insurance payout, they will tell you that insurance is the best product they've ever bought, the best money they've spent, the best investment your money can buy. But someone who hasn't had a claim is going to say, where's all this money going? So the first problem is perception and understanding. You didn't wake up this morning and think, I feel like buying 3 scoops of life insurance. Let me go online and find the cheapest deal. That doesn't happen, unfortunately. It is something that's intermediated. We need a human touch. We need a human to explain our vulnerabilities and say, Clyde, you're human. Bad things can happen. And if they do, how are we going to look after you? And so I think that is the first issue. One of the ways that you close that perception gap is with financial advice, qualified, professional, human touch, who can explain their realities and unfortunately how desperate situations can get with the flick of a switch. So that's one of the reasons why Liberty is so big on financial advice and humans as part of that advice. The second reason is affordability. Insurance is expensive, and the cost of living is going up and spiraling for all of us. That's no secret, and it feels like it's one direction traffic. So to set aside a chunk of money for something that you don't necessarily perceive and see the value of is a difficult decision, and there's a big fight for our share of wallet. And then the last thing I think is the insurance industry is ripe for innovation, and there are many ways in which we can improve the way that we build insurance products, sell insurance products, and engage with our clients over time. And that massive opportunity presents a way in which we can close that gap and meet our clients' needs better. And that's something we're super excited about at the group. And we actually think we've got quite a few solutions on the way, which hopefully will do a lot to remedy that gap.
Well, that's a really interesting analysis and diagnosis of, why we have that gap. And let's talk then a little bit, because I want to come to the financial advice part. I couldn't agree with you more. I think these things require someone to understand your personal circumstances if you're an individual, or your business circumstances. It's very difficult to design or to advise a solution or sell a suite of products if you don't really understand the individual or the business behind it. But a lot of this does come down to data, and it's the big buzzword, in God we trust, everyone else bring data. AI is the other big buzzword of the moment. It's all over markets, and I don't want to talk about what's going on in South Korea with the sell-off in memory chip stocks, but we know these are technologies that are transforming business. They're transforming the way we use the internet. Personally, everyone's engaged with it. From an insurance perspective, where are you seeing these technologies already making the greatest practical difference inside insurance?
Great question, Michael. And for us, within the Standard Bank Group and within Liberty, AI is certainly the biggest enabler, the biggest disruptor we're going to see in the next few years. The group was recently awarded a really interesting accolade last month, I think. In terms of AI maturity, we're actually the most mature bank in South Africa, and in terms of innovation, leading the pack across Africa. So that's an evident AI index, which was released in June, and I think really testament to how seriously the bank and the group take AI and where we see the future of technology going. You're spot on right. It comes down to AI, and AI is only as good as the data you give it. So the real secret is going to be big data and the data that's available. And you're right, it starts with clients' needs. So we see AI really playing a role in three key areas. The first one is serving our clients better, and you've given a great example. The first part of that discussion with an advisor is understanding the needs, the shortcomings, the problems. What do we want insurance to do? What do we want financial services to do for you? And data is going to play a massive role in enabling that advice. Won't replace it, but it's going to put that advisor in so much of a better position to understand the position you're in, both initially and ongoing. The second one is ways of work at the office. It's going to really, really augment and enable the way we're able to work and design, provide insurance, the efficiencies that we see there. And then the last one is just value added to the bottom line. And on all three elements, I'm convinced AI is going to be an absolute game changer. I think we haven't really wrapped our heads around the scale of and the impact that it's going to have on society and business. We're working quite extensively on embedding AI in the group and shifting it from sort of ad hoc, quick tools and fixes to actually embedding it in the engineering, in the design, in the architecture of the business fundamentally, which is phenomenally exciting and going to deliver massive value across the spectrum, which I'm super excited about. But most importantly, it's going to result in better outcomes for our clients, which is what we're here for.
Yeah, and to bring the financial advisor in, I think there's been a lot spoken, a lot written about this revolution of a technology and the impact it's going to have on jobs and humans, and will it replace, displace, augment, all of these things. I think we've already touched on it. This is still very much a human-led industry. And I think we've even seen, when it comes to dispensing financial advice through robo-advisors, a decade ago, everyone was rolling out a new robo-advisor and said, oh, it's the death of the financial advisor. A lot of those projects weren't nearly as successful to displace financial advisors. They're still around, but I think it's shown that there is still a place for financial advice. But given that we've got this technology and insurance is becoming more digital and automated, there are obviously parts of the advisor's role that the technology will replace. So which parts become more valuable then? And what do you see this technology doing ultimately to enable the financial advisor to better serve a broader swathe of the South African market? Because I think there's an opportunity. A big part of the advice gap is also, some parts of the market have just been uneconomic to service. And now you've got technology to maybe change that equation a little bit.
Yeah, categorically, Michael, you're spot on right. And that's where I'm super excited. in just widening the net of who we can provide protection to and who we can touch. So that is super exciting. And you're spot on right in your assessment. My view personally is, if you go online, you almost get two extreme views. AI is going to wipe out every job, and you and I are both going to be farming or sitting on the couch. Or on the other side, AI is not going to have any impact. And I think both are great for clicks and views, but the answer probably lies somewhere in the middle. And to be fair, it's a bit immature to make a call on that. My sense is, personally, I think it's going to absolutely enable and augment the human touch. For those laborious, mundane, repetitive tasks, it's a phenomenal gain because it improves your efficiency and lets you focus on what matters. And to your question, in the advice process, that's the human touch. That's the part where having a human engagement and someone across the table from you or across the screen from you can't really be replaced by a piece of technology. Something like thinking about natural behavioral biases. So the barriers that stop you from making optimal financial decisions, typically called behavioral economics or behavioral science. A person who's been there before, professionally trained to deal with those sort of circumstances, can see, Michael, I think you're making a wrong decision because of this. You're framing this incorrectly. You're thinking of this wrong. So bringing in that personal touch, that behavioral science component, something we've got a whole team dedicated within the group to thinking about and enabling our advisors to do. So we really see in an advice-led space, I would argue the value of that human touch may even get more important because we're talking to our AI, our ChatGPT, our Claude every day for advice, for guidance, for recipes, and having someone interject and use that information to give us a better result, I think might actually become a differentiator rather than get replaced. So to what it will enable them to do, I think the first one is data. Imagine the AI going through your spend data on your credit card and understanding exactly where your budget goes up until this morning's coffee relative to previous days, crawling through that and doing an analysis, but then giving that to a human to understand your needs and have a conversation about how we can better protect you and give you the right financial services products for where you are in your life today. Those kind of conversations are really, really exciting. And I think there's almost no limit to the amount of improvements that you can expect to see because of that scaling and augmenting that human effort.
Yeah, I can absolutely see the value in that. Just recently, there was an example, I think it was Gemini, I may be mistaken, that wanted access to all of my Gmail because it said it could help me better understand queries. And I paused for a second, though, because I was like, how much data am I handing over? And to me, it does boil down to trust. I mean, I can see the value in this. I can see the value in having that machine which can compute vast quantity of data, do all the analysis and admin, and then the advisor focusing on the judgments and my behavior and the difficult conversations sometimes around the dinner table. But for an established insurer, so much of what you do is about trust. And I think it could be both an advantage and maybe a constraint here. So how do you innovate quickly while still protecting customers, complying with all of the data regulation, privacy, and just maintaining that confidence in the brand that you're going to do the right thing?
It's a great point, Michael, and one I probably should have emphasized earlier. While we are really racing towards embedding AI in how we do things, it's very much on the back of doing it responsibly, aligned with our values, with the right belts and braces, the right protections, and importantly, the right information protections for our clients. It's not a new problem to financial services. If I think when I engaged with my broker, something that always made me a little nervous was in order to get accurate insurance, I need to tell them what I earn. And it's all, initially, it was really something I had trouble with disclosing, where's this going? But provided you can give the client comfort that it's being used for this purpose only, it's almost ring fenced, it's not being shared, it's not being sent across the organization, et cetera, that would get me across the line. And that's worked, historically. And it's a piece of information at a piece of time for a specific purpose. and it's protected, that it's not used elsewhere, and it's not used in the incorrect way. And provided you can provide those protections to clients and keep that trust up, you can achieve those outcomes and say, I'm going to deliver you significant value because of the sharing of this information. This is what it can help me with. What it won't be used for is ABC. And there's different ways to do that. You know, some of the ways guys have achieved that over time is it gets destroyed after a certain period of time or after a certain function, et cetera, et cetera. But you're spot on, right? What we do at the end of the day is insurance. If you think about it abstractly, we sell a piece of paper that's a promise. And so what the Liberty brand lives for is trust. We require people to trust that they'll pay us. If you think of a simple life insurance example, we are expecting that the client pays us for their full life, and when they're not around to fight and ask questions, we'll pay out money to the people that are most dear to them. So you're spot on right. Trust is exactly what we're about. And so it's very important that we get this right. And we're spending a lot of time, I'd call it measuring twice and cutting once when it comes to any digital adoption, but particularly AI. We have to do it very, very responsibly. So we are, while we're racing, and I think leading the pack quite significantly, we're doing it very, very responsibly and in a staggered way to make sure that we tick those boxes and give our clients that comfort.
And Clyde, I can speak from personal experience of how significant that decision to take out income protection and dread disease and disability cover was for my partner, who suffered a stroke, and it was with Liberty, and they're still paying an income today, even though she can't work. And she was very fit, took it out. I think it was part of an employee benefits package at the company. So she didn't really think she was going to need it. She was very healthy, very fit, running 10K marathons in her 40s. But it happened because life happens at the end of the day. And as you said to your earlier point, that trust, knowing that that was there, I don't think anyone can really describe how important that is when you're dealing with everything else that you have to in a moment like that. So it is so critical and so encouraging to hear that you're approaching it in such a responsible manner. That said, I think it's very exciting. I mean, it really is. It's going to change the underwriting experience. I mean, I've spoken to some of your colleagues around how it's just changing underwriting for specific climate risk, where you can use geospatial data, other data to really insure almost down to a household level. So looking ahead, I mean, there's lots coming down the pipe. Where do you see the greatest opportunity for innovation in South African insurance?
Michael, it might be a anticlimactic answer. I think one of the biggest opportunities is simplification. So, our three core pillars that we stand for at Liberty are humanity, simplicity, and certainty. Certainty gives you that trust. Humanity is what it's all about, because at the end of the day, there's a human being who's had a stroke and isn't earning an income. And we have the phenomenal privilege of changing people's lives. I could have chosen to manufacture buttons or shirt collars, and if I did a better job, maybe 1 in 100 days someone's button didn't fall off. But instead, the opportunity that I have is to design insurance products that touch people when they are most desperate and destitute, and literally change their lives. So we take that super seriously and are privileged with that responsibility. But the third pillar is simplicity. And I think as an industry, I don't think we've done enough we've probably gone the other way, favoring a bit of complexity, especially with the digital age. And I think there's a real opportunity there to look at the simplicity lens and say, does it have to be that complicated? How do we make it more accessible, more understandable for the man in the street? And how do we close that gap from insurers are just there to get out of claims and use the fine print to actually what insurance really is, which is a social good, a group of people coming together to protect one another when they are hurt, injured, or pass away, or have a loss. And if you think about it, one could argue that that's essentially the essence of Ubuntu. We're looking after each other. which is a phenomenally beautiful product that literally changes lives. And to your earlier point about the insurance gap, closing that gap for me starts with how do we make it more understandable, more relatable, more accessible. And I think the start of that is making it simpler. Simpler to buy, simpler to use, simpler to change, simpler to understand. So ease of use journeys, both for the advisor and the client, ease of access and ease of understanding. And I think there's heaps of opportunity for the industry to rethink and leverage technology, the digital age, artificial intelligence, to really give simplified, at least on the front end, simplified solutions. On the back end, it might be crazy complex what's happening, hyper personalized for Michael on this Thursday, exactly how he needs his cover to work, changing and predicting what will happen over the weekend, and changing because he's got a bicycle race and he needs a little bit more cover. He's traveling to the Eastern Cape. He needs a top up of this. Those kind of solutions on the back end might be super complex and leverage this technological advancement that we're seeing. But for me as a client, it should be simple. And that's a lot simpler said than done, but I think it's a solution that's attainable.
And I certainly don't think it's an anticlimactic ending at all, because it is actually quite a profound idea to simplify the experience, to close the gap, to bring more people into the pool will ultimately ensure that you can bring the cost to serve down and share that responsibility in a very Ubuntu type fashion, but using all of that technology behind the scenes. Clyde Parsons, fascinating chatting to you. Thank you very much. Head of Innovation at Liberty. Great pleasure sharing your thoughts on innovation in insurance and moving beyond just designing new shiny products, really zeroing in on where you can have that deeply personal impact, whether it's on individuals or businesses and entrepreneurs that South Africa desperately needs to provide better support to. It really is what I see as a potential golden age for insurance if the opportunity is grasped. Thanks for your time.
Thank you, Michael. I appreciate the opportunity.